Hey everyone, thanks for jumping here back again. Today we're going to be talking about Avax and we're going to be discussing whether it's a good time to jump in and to accumulate or if we should wait for another adjustment and a pullback. We're going to be using the risk metric and the DCA index in this video that will help us make a price prediction. But before we do get into this one, I would really appreciate it if you subscribe to the channel, leave the video a like and a comment, as every bit of support helps us. Let's get into this one. So we are starting by the risk metric super quick, and this is basically a risk adjustment model that regards weekly closes to show us if the risk is too high to invest and to accumulate or if it's the perfect moment. If you are new here, this is the model that we use to navigate the market so we can lower the exposure to high risks, because investing in the crypto space is in itself a big risk since we are in a super volatile market. So we had this idea of creating a risk adjustment indicator that helps us jump in and out. So whenever the risk is in this green area, in this green region, we start accumulating, which in the case of Avax would have been back here when it was between $9 and $20 this market cycle. And we also start gradually selling when we get into this region. Of course, we don't sell all at once because sometimes the risk goes into this region, into this red area, but it doesn't go as high as we would expect, which is what happened lately before the drop. So we sell, for example, a bit here, let's say 20 to 30, maybe 40% of our holdings when our risk is between 6 and 8 or 7 and 8, depending on your risk tolerance, and keep the rest until the risk reaches further higher levels, like back in February, for example, when the risk reached 9 after Avalanche went from around $2.5 to $64. You really don't want to hold your crypto when the risk goes above 9, like in here, for example, and you shouldn't care what others tell you or if there is a launch of something new. Historically speaking, with Bitcoin, Ethereum, ADA, or whatever crypto you own, when the risk goes above 9, it doesn't take us more than a week before seeing a massive pullback. And by massive, I don't mean 30 or 40% move to the downside. I'm talking about a 70 to 90% move to the downside. And when this happened with Avax, the price dropped 85%. Now the price went up around 1,500% from our last accumulation phase to our current all-time high. The risk also went from these low regions indicating a buy opportunity to these regions indicating a sell opportunity. And now the risk didn't go as high as back in February, that's true, but again, Avax still did a 16x in less than 5 months, so it's normal to have a retracement and a pullback on the short term. And of course, we can go into these regions again, it's possible, and if we do, then it's a good time to pick up another bag of Avax. If we ever don't, for example, and we go up, then it's also good for us because we still have 60 to 70% of our Avax holdings that we still can sell when the price goes up. So you can see it clearly. This strategy of following the risk metric to navigate the market favors you either way. Whether we go up or down, it doesn't really matter. The risk is currently at 4.8 in this region, and I honestly never buy nor sell here, so we will keep an eye on this to see where it takes us. We don't have much data with Avax, and this is why we are going to be pulling the DCA index to confirm our idea, because the DCA index works on the daily and not on the weekly, so it gives us much more data points. I do prefer the risk metric because I think weekly closes are more important than daily closes, but again, we don't have much data with Avalanche, so we are going to be using this. And by the way, this is created by JDCA. He also has an amazing YouTube channel in which he talks about it. So make sure to check him out. I'll leave a link down below. So this indicator is on the scale of 100 and it has almost the same purpose as the risk metric. It basically shows us the market momentum, and similar to the risk metric, whenever we get close to 0, this indicates that we are getting close to our market cycle bottom and it's a good time to accumulate. And whenever we go high, this indicates that it's a good time to bail out, sell, and wait for a correction. And as you can see, each time we have a decent bull run, the DCA level goes from the bottom to the upside. Like here, for example, price going up, and each day the DCA level gets higher, indicating an increase of the risk. Now, Avax highest risk was back in February, which is similar to what the risk metric showed us, and this confirms the idea that these two, this region and this second blue region, are the best accumulation phases that we had so far with this coin. For the time being, the DCA level is at 49, which, similar to the risk metric, indicates that it's a bit risky to jump in and to buy, because this can go either way. For example, if we go back in time to April, the DCA index showed the same number that we currently have. However, the price dropped another 40%. as you can see it, same thing a few weeks later. Similar DCA level, but price kept on dropping and it went almost 80% down. However, in September, we had a similar DCA level, but the price recovered and went up 150%, which is 2.5x. And this is why I never buy nor sell in this region, because it's unstable and it's unsafe. Sure, you can buy here if you want to, and I can't deny that there is a high chance the price goes up, but as someone who bought here back in these days, there is no need for me to expose myself to risk. Now, one more thing, and this is something new in our channel that took me a lot of time to work on, but I'm really happy for making this. So this basically shows us the potential risk levels with the risk metric that we can reach and the corresponding price target. Now, of course, this changes every time with each close we have, but these are the current rates. Now, Avax is at around $92 to $91, give or take, with a 4.8 risk on the risk metric. And if Avax ever goes to 9 again, which is our highest recorded risk ever with this coin, then we can see Avalanche at around $250, which would require almost a 3x from now. However, if Avax decides to go back down to our accumulation phase, then the price will need another move to the downside and to go below $80, $80.5, which corresponds to 4 on the risk metric. I don't think the price will go $25 or $395, and if we ever have a bull run and rally to almost $400, I would say that us reaching a risk level as high as 10 would take a long time, and I mean several months, but this is the crypto space and we know that everything is possible. So I'll be posting more of these risk to price tables with other coins like Elrond, Ethereum, Cardano, Link in the future. So this was about it. This was just an update on the Avax situation. I hope it's useful and it helps you navigate the market. If you find the content interesting, make sure to subscribe to the channel, leave the video a thumbs up and join our Telegram. Peace.